Hello and welcome to the CFO Weekly Newsletter. Thank you very much for joining me. Well, let's have a look at what the markets have been doing. There is certainly a lot of fear in the markets right now. Let's have a bit of a look here. We have entered into a bearish opening range. Okay, so we have broken below our lower range here, so we are in bearish mode, and it was a big down day. Okay, we opened at 3915, got as high as 3925 and as low as 3814, so about 110 point day as far as the highest point to the lowest point, and it certainly was a significant day down. However, we haven't even broken below the 50-day moving average yet. But a lot of people are asking me the question, why did the market go down, Sean? Why? Everyone seems to be asking me that. So let's just address that now. Well, what is on the screen right now is predominantly the reason. Well, markets went down. Why? Because no one is buying these treasury bonds. Sean, whenever someone talks about these treasury bonds and yields and inflation and all this type of thing, I get lost. Can you try and break it down simply for me? Yes, I can try and do that for you. My goal here is to not blow you away with how much I know. It's to make it simple so that you can actually understand it. Let's say that the government wanted to raise money, or they wanted to do a stimulus, for example. One of the ways they do that is through people buying bonds. They release bonds into the market. So let's say, try and keep it simple here, the reason that these bonds have been going down, as you can see, probably a bit easier to see on this chart. It's been a steep downtrend and then broke out of the downtrend and went even lower. So it's certainly been moving down here. Okay. Reason being, well, particularly on the day that I just mentioned where the market moved down dramatically just a couple of days ago, there was no one really wanting to buy bonds. So what do they have to do? They have to reduce the price to try and entice more people to want to buy them. But let me start from the beginning here. Buying a bond. Let's say you buy a bond, just make up some figures here. You buy a bond for $1,000, okay? And let's say it's a 10-year bond. Okay, so what that does, the reason you would do it is that every year, it's actually twice a year, but let's just keep it simple. Every year, they're going to give you, the government's going to give you something called a coupon payment or a cash flow for holding that bond. So you buy it for $1,000, and every year we're going to give you $20. Okay, so that's 2%. 20 divided 1,000 is 2%. Okay. So we're going to give you $20 a year as a coupon payment, it's called, right? Or that could be referred to as the yield of the bond. 2% is the yield, the amount of money you get for holding it, right? So every year for 10 years, I'm going to receive $20, 2%. Okay, great. Then at the end of the 10 years, I will then receive the face value of that bond. In other words, the $1,000 that I spent on it. That's pretty much how it works. How do you make money with bonds? Well, if the bonds went up, you could obviously sell them for more than you bought them for, or just simply holding them and receiving the coupon payment. That's, to try and keep it as simple as I can, that's roughly how it works, okay? So government bonds are considered risk-free. Now, they're not really risk-free, but they are backed by the full faith and power of the government, whatever that means, but they are considered risk-free. All right, so now that the bond yields are going up, Sean, why are the bond yields going up when the bonds are going down? That's how it works. Bonds go down and the yields go up. Let's say, for example, that $1,000 bond that you bought, okay, no one was buying it. So what they did, the government, they actually reduced the price. Just use a crazy figure. Let's say they reduced it to 500, half, right? What would that then do to the yield or the coupon payment percentage? Well, it would double it, wouldn't it? Because if you're still getting $20 every year for holding it, but now the value of buying it's only 500, the yield percent or the coupon percentage is actually 4%. Does that make sense? So that's why, as the bonds go down, the yields go up. I hope this is making some sense. So as the bond yields go up, because the price is going down, right? You're getting more cash flow from it compared to the cost of buying it. Okay, so the percentage is going up as far as the cash flow you're getting. The theory is, well, if I'm getting higher payments now for what's considered a risk-free asset, a government bond, why would I take the risk of owning an index like the SPX or a stock? So people are then getting out of stocks, right? So people are getting out of stocks because there is a risk-free alternative to generate an income or cash flow or a yield, okay? If that's making some sense. Okay, trying to keep this as simple as possible. Now, a lot of companies, large companies, will actually park their money in government bonds called treasury bonds. Okay, now this is, for example, Apple owns over $52 billion worth of these US government bonds. 52 billion. That's more than most countries. So a lot of these big companies that have billions of dollars worth of cash, they need to park it somewhere to get a return. A lot of them park it in treasury or government bonds, Apple being a very good example of that. So yeah, Sean, I understand what you're saying. Okay, the price of the bonds are going down, which makes the yields go up. Yep, I understand that. So then people are getting out of stocks, but there must be a tipping point there, and there is. Okay, so there's a tipping point on particularly 5 and 10-year bonds. So you could get one that lasts for a year, 3 years, 5 years, 10 years, 20 years, 30 years, right? But on the 5 and 10, what it is for the 10-year, it's 1.5%. So as the yield, the money you get for holding it, remember that $20 every year, right? Once that 10-year bond goes above 1.5%, stocks will normally sell off as a result of that. For the 5-year bond, if it's over 0.75%, then stocks will typically sell off at that point. Both the 5 and 10-year government bonds recently went way past these levels. The 10-year going as high as 1.6% very briefly, and the 5-year moved up faster and higher than it has done in the last 10 years. This spooked the market and caused it to move down. Okay, so all the major indexes were down, all the sectors were down, stocks were down, everything was down. Bitcoin was down, although Bitcoin did hold up relatively well. Right, I was actually fairly impressed with the way that Bitcoin held up. Didn't really have a massive sell-off like we've seen in the past as a result of the market moving down. So yields go up, okay, and people then tend to go to stocks. But why are yields going up? Why is this happening? Well, part of the reason is this, where we started. The House just passes $1.9 trillion pandemic relief bill. So stimulus, massive stimulus is coming. So people are thinking, well, if you're about to flood the market with $1.9 trillion worth of bonds, because they've got to issue bonds to raise the money, right, for the stimulus. If you're about to flood the market with $1.9 trillion worth of bonds, why don't I just buy those bonds? They will be cheaper, as there's going to be so many of them available, right? Huge supply of bonds. It's going to cause the price to go down, and I can just go buy those cheaper bonds with high yields later. I'll just wait. These are some of the reasons why people are not buying bonds. They're going down and the yields are going up. Strong economy is coming. This is something that I said a little while ago. The bonds doing this shows me that we are headed towards a strong economic boom in the economy. It sounds a little bit strange to say that, but there's so much money coming into the market. Why would you buy bonds when you can buy stocks? Yeah, we spoke about that. But when we're thinking about this strong growth coming into the markets, you're thinking that people are looking to make a bigger return on buying stocks. Okay, so if stocks are doing very well because the economy is doing very well, I can make more money buying stocks. So that's another reason why there's going to be less people wanting to buy bonds. The other reason is that why the bonds are going down and the yields are going up is because people are concerned that inflation may be coming, right? So if inflation goes to say 2%, your bond yield of say 1.5% on a 10-year, you're actually losing money, right? The real rate is the return you're getting minus inflation, the rise in prices generally, right? So that's the other reason people are concerned that there may be inflation coming. Okay. The other reason, the Federal Reserve may be forced to raise rates quicker than what even they anticipate. And that's going to cause bond yields to go up, and I can just go buy those higher bond yields later, right? So there's a whole range of different things going on. People ask, when you see the bonds selling off here, you know that that's going to be hurting stocks because the yields are going up, but there's not really a lot of people flooding into bonds. What's happening is, I believe, is that people are sitting on the sidelines with more cash reserves. Tends to be what a lot of people are doing right now. But anyway, just as a quick snapshot there, margin loans are at their highest levels as well. That would certainly cause some issues. But, to try and break it down as simply as I can, there's some of the reasons. Let me know if you found that useful. Now, for me personally, though, it's only come down to the 50-day moving average. I would say that using the old Warren Buffett phrase, be greedy when people are fearful, and fearful when people are greedy. Right now, people are very fearful. We had a big one-day move down. Certainly in the NASDAQ, we saw a big move down there, right? We're below the 50-day moving average there. My feeling is that there is very strong economic growth ahead. I mean, you have a look at this. Personal income is up big. Personal spendings are down, right? People are saving right now, but there is a lot of pent-up demand, right? Record levels of savings. There's no doubt about that. But there's a lot of pent-up demand here. I believe that will be released into the economy, causing more velocity than what we're seeing right now. Biden orders airstrikes in Syria. Yes, that was a little bit concerning, but apparently it was a tit for tat, right? They did this to us, we did that to them, and we'll sort of leave it there. We'll see how that goes. Nvidia, something that I'm very interested in right now. They had record sales in gaming and data. Have a look at this: revenue of $5 billion in the fourth quarter. My goodness me, up 61% year over year. My goodness me, that is an incredible amount there. I mean, have a look at Nvidia. Let's have a look at it. Nvidia, yes, it's had a move down, right? It got above 600 and has pulled back down to the 50, but it wouldn't surprise me at all if now we start to see a bit of a bounce from here, even in tech. Most times, not every time, but a lot of times in February, the market does move down. So we're seeing the market move down. Because typically in February, that's what happens. I think very easily we could see a bounce from here and things move much higher very, very quickly. So I'm not 100% convinced that this is the big move down that everyone is anticipating. I don't think that that's the case. I could be wrong, obviously, right? But for me personally, certainly Nvidia has my attention, right? I'm looking to set up something very conservative in that. I think Microsoft could bounce there off the 50-day moving average. Talking about Bitcoin, you have a look what it did last time. It moved down to the 50, then had an incredible rally. Could we have worked off this overbought condition, moved back down, held up relatively well, right, above the 50, better than most indexes, not all the indexes, but most, and could have another move to all-time highs. Could easily do that, right? So, that's another area that I'm looking at as well. And, I still have my position here on CVX, okay, very conservative cash flow strategy that I have on this one as well. I'm certainly looking at that. My silver trade is still doing very, very nicely. Yeah, we've had a bit of a pullback there, but it's still doing very, very nicely. I mean, where did I have that? I'll have to get that back up in a second. But I also had some VIX calls. They've made over 10% in 2 weeks, so we'll be exiting those VIX calls now. I'm going to get everyone to exit the VIX calls. And my trade on RRD made a 45% return. And a trade here on Procter Gamble, look at that, boom, happy days. We have made some very good money with put options on the downside with this one. So I'm going to exit PG for a very nice profit on that one. My VIX calls, I'm going to exit those for a 10% profit, and my QQQ puts, I'm going to exit those as well. So we've made some very, very good money there. Still holding some of our longer term positions. We did very well with well. This one worked out very nicely. We'll be exiting that position, but I'll be holding on to my silver position going forward. And for me, I believe that we could get a bounce higher from here and start to move up in March. Okay, that's my feeling. Right, a lot of these stocks are at their 50-day moving averages or at significant moving averages here. Nasdaq is below. I think we could get a move higher here, but we will see. S&P right at its 50, no doubt about that. I expect a bounce from there. We see the Dow Jones Industrials right at its 50. So while there's a lot of panic and fear and all the rest of it going on, we've got a very strong earnings, extremely strong earnings. And granted, a lot of companies did reduce their expectations when they set their earnings, how much they were looking to make. But even so, still very, very strong earnings. I mean, have a look at some of these other companies here. 80% of the S&P 500 companies beat estimates. So very, very good. Now, I did talk about the fact that they set them very conservatively, their expectations, but even so, the fourth quarter results have done very, very well. No doubt about that. Very, very nicely. So certainly they're moving up very nicely. Very strong earnings. Amazon, my goodness me, what a monster. 100 billion sales quarter. My goodness me. Microsoft beats earnings handily. Look at all these companies that beat their earnings. Nvidia, already spoke about them. So for me personally, I think we're going to get a bounce in March and we're going to start to move higher. But again, I could be wrong, right? I'm setting up very conservative trades here and we will see what unfolds. But for me personally, that's where I'm at. And there's some of the positions that I'm looking to get into and that I have been in. And I hope you guys all found that very useful. Let me know what you think. Send your feedback to support@cashflowoptions.com.au. Thank you all very much for being here. I'll talk to you all again next week. I'm going away this week, which is why I'm getting this newsletter out a bit earlier. So I'm going to go out and try a few ocean resorts and a bit of golf and shopping and restaurants and all those types of things. Switch off for a little while. It's been a busy couple of weeks, but I'll be back next week to talk to you all again more. Let's see what happens in the market this week. Thank you so much for being here. My name's Sean Allison. All the best and bye for now.